Good evening, money magnets and master traders. Once again, SPY has closed at another new all-time high. I have to say the candle was very tiny. Intraday price action was pretty boring. We had one good setup. We cleared my 659.8 level here on the 15-minute chart. Managed to hit my level at 661, but that was about it. Rest of the day, it just flagged out and didn't do anything. But on the daily chart, we can see that it closed at a new all-time high, clearing the 1.618 fib level. That level is at 659.7. I mentioned about FOMC. As you guys know, we have FOMC later this week at Wednesday. I'm not expecting much of a move, guys. We may even chop tomorrow, or we may get a similar day that we had today tomorrow. We'll see what happens. Anything can happen, but I'm thinking we won't get nothing until FOMC. At least that's what I was thinking this morning. And then I went to check the option flow on Cheddar Flow. I added in some filters. I look at 100K premiums or above. I added the time frame, the expiration time frame in 1 week, because Unco is a short-term trade. I wanted to know what the big money players were doing in the short term. And I look at the above, the ask and the regular ask. Sweeps and blocks. I'm looking at the sweeps and the blocks order, and $6.1 million went into put flow, while 1.5 million went into the call flow. And I'm looking at the puts. A good amount of them are very bearish and coming in around FOMC in a couple of days FOMC as far as expiration date goes. I'm seeing some of these, especially towards the end of the day. You see how it highlights here? Those are the highly unusual orders. And you can see 639 strike price. Big size, over 5,900. September 17th. 639 strike price. Another one, September 17th, 640 strike price. That's also another unusual, highly unusual order. This one is for September 16th. So we see the big money players, smart money maybe is what we call them. They're more leaning into puts compared to calls. This is another one, September 17th, 640 strike price. Another highly unusual order. So based on the flows, it looked like a top, it might be coming in. They might be expecting a top, guys. We might be expecting SPY to correct itself. Now we have to combine that information with the charts. We can see that today we cleared 659.7. When do tops get put in? Well, it gets put in when we get a false breakout setup. But what I want to see is a rug pull elevator down type of move, and we may get that on FOMC, but it would be nice if we get it tomorrow, the day before FOMC, just to play a little tricks on everybody, because everyone's expecting a big move on FOMC. Maybe they'll do it the day before, but that's just wishful thinking. Here on Uncle Charter's channel, we want to be ready. It's about being ready for any scenario. So like I said, if it is to be bearish, 659.7 must fail. I'm also watching 658, 656, 654.5, and 653. Those are the levels that Uncle will be using to trade the next couple of days. And if the flows are correct and we end up pulling back, we want to see those levels fail. Especially look how far it is from the 5 DMA as well. The 5 DMA needs to catch up. But if I'm wrong about being bearish and those levels do not fail, that's fine. Uncle does have a level at 661. And if that level clears, I'll trade it unbiasedly with 662.5 in play, and then 664, and then 666 at the 200% fib level above. My guess is that we'll get a top in on FOMC, but my advice is to be ready for any case scenario in case the market makers want to pull tricks on us starting tomorrow. I'm open to any case scenario, but I just want us to be ready and know the levels and setups so we can trade it. And we're moving on to QQQ. And you can see it's also closed at a new all-time high. As far as the price action goes, 591 cleared today. So if we are to get a false breakout setup, 591 as well as 589 must break down to put the lower targets in play. 586, 583.4, 582, and 580. If we do happen to clear the next resistant level at 592.6, we will continue to head to new uncharted territories at 594 and possibly 596, and of course the big 600. Can QQQ hit 600? That's a question right there. NVDA still managed to close above the 20 daily moving average. It's been consolidating. It may be waiting for FOMC as well, but we still must know the levels and the setups. 176 and 174.5 are support. That support held today. But if it fails tomorrow or FOMC, that's the time to get bearish. Now, if we hit support and it's time to truly bounce, I need to see 178 and 179.8 clear. It hasn't cleared yet, but if it does, that is when I would be bullish with 181, 184.5, and 186 in play. Tesla, beautiful trading for Tesla. After clearing 390 yesterday, it went for a beautiful gap up, and I was watching the 426 level as a fib level. It couldn't break above that level. Had some selling pressure around that area. Then I did have support I did have support, which I mentioned in the Discord, around 424 and 420. Broke down those support levels. There was another critical support level at 415, and then all the way down here at 403.8, as you guys can see. So that's bullish, the fact that it closed much higher than last week, but intraday it was very nice with puts if you traded Tesla. But we have to take it from where it's closed today, which we can see the next resistance level is at 415. So if we are to be bullish and favor some more upside tomorrow, 415 must clear. 415 must clear to put 418, 420, and all the way back up to 426 back in play. I'll definitely be more bullish above 426. But if we don't clear those levels and we manage to break down support levels at 410, 408, 405 and 403.8. If we break down those levels, we can go for the gap fill around 396. And if we fail that level, 390 or much lower would be in play. Here is IWM with the double inside candle setup. Now you can see that we have the grandmother candle. I call this the grandmother candle, September 11th candle, and then September 12th candles within that range. And then today's candle is in the range of last Friday's candle. So this is a double inside candle setup. It is contracting, getting ready for a massive move. Levels are still the same, but the chop range that I'm watching now is, well, we got 241 all the way down to 238. I need to see a break of that range, then I would be bullish or bearish. So above 241, I'll be bull bias with 245 or higher in play. And below 238, I think we go hit 236, and below 236, I would be bear bias in favor we go hit 234, 232 or much lower. Here is Apple. Now we had a big body green candle from last Friday. Today we have a gap up in a doji. Gotta be careful because this could end up being an evening star pattern. If we gap below the doji tomorrow, the doji's lows at 235. If we gap below 235 or break below 235, that is bearish, and a possible evening star pattern could be playing out, which means the third candle could be a big body red candle, putting 232.6, 230.7, 229.4, and 228 back in play. Could be a very nice move to the downside. Or tomorrow could be a bullish continuation. If we clear 238, 239.5, 240.8, 242, and 244 would be all back in play. The range of the doji is 235 up to 238. So anything in between that range is chop, and we should stay neutral. And last but certainly not least, here is the VIX, showing some signs of life. Could the VIX be giving us a hint of what's to come? Volatility. As long as above 15, I would stay bullish on the VIX with 16 and 17.3 in play. If those levels can hit, should be a very, very nice trading day for all of us. But if VIX breaks back below 15, I guess we truly will have to wait till FOMC to get a really big move. Alright guys, that's what I have for you guys today. I love y'all. Thank you so much for watching. And remember, you are a money magnet. Peace.